By the end of this video, you will learn what is a candlestick, how to read candlestick charts, and the candlestick patterns to make profit in the market. A candlestick depicts the battle between buyers and sellers over a given period of time. It is also the interpretations of price action, and its origin is from a Japanese rice trader. A candlestick consists of the opening price, the closing price, the high, the low, the body of the candle, and also the wick. There are two major types of candlesticks, the bullish candle and the bearish candle. To easily identify a candlestick, you need to pay attention to the opening price, the closing price, and also the body. So for a bullish candle, it opens below and closes above. Then a bearish candle opens above and closes below. The default color for a bullish candle on the chart is always blue, while for a bearish candle it is always red. Let's talk about the candlestick patterns to make profits in the market. First is the bullish engulfer. This is a two candlestick formation. It is a bullish reversal candle. It shows that buyers are in control in the market. If you should find them on support zones or demand zones, it tells a story that price may start buying. Next is the bearish engulfer. It's also a two candlestick formation but shows that sellers are in control. It is a bearish reversal candle. So if you spot them on supply zone or resistance zones, just know that price may likely sell from there. Next is the hammer. It's a bullish reversal candle showing that buyers are in control. If you see them on support zones, on demand zones, it's a signal that price may likely start buying. The next one is called the inverted hammer. It is a bearish reversal candle. It shows that sellers are in control. Most of the time this happens at resistance zones or supply zones. So when you see them on your resistance zones or supply zones, this is a signal that price may likely start selling from that zone. Here's another candle called the bullish railway. It is a two candlestick formation and shows that buyers are in control at that certain time. It is a bullish reversal candle. So if you see them on support zones or demand zones, this suggests that you can start buying from there or that the market will start buying from there. The sister is called the bearish railway. It's also a two candlestick formation. It shows that sellers are in control at that particular time. It is a bearish reversal candlestick. So when you see them on resistance zone or supply zone, this suggests that price may start selling from there. Next is the bullish pin bar. It's a bullish reversal candle and it shows that buyers are in control. If you see this form on your support zone or demand zone, this signals that price may start buying from that level. The next one is called the bearish pin bar. It is a bearish reversal candle and it shows that sellers are in control. You look out for them at resistance zones and supply zone. If it happens, then this suggests that price will start selling or price will go bearish from that particular zone. Then here is the morning star. It is a three candlestick formation and it is also a bullish reversal candle. It shows that buyers are in control in the market. You look out for them at support zones or demand zones. If you see them play out on your chart, this is a signal that price will start buying or price will turn bullish from that particular zone. Then the evening star. The evening star is the sister to the morning star. It is also a three candlestick formation. It is a bearish reversal candle. It suggests that sellers are in control. So when you see them on resistance zone or supply zone, all you need to do is sell. It gives you a signal that price will start selling from there or price will go bearish from that particular zone. These are called dojis. Price opens and closes at the same place. It is an indecision candle. So when you see them on your zone, maybe resistance zone or support zone, it shows that at that particular point there is an indecision in the market. So all you need to do is just wait for the next candle to open and close. Here are a few tips to reading a candlestick. The size of the body tells who is in control of the market at that particular point. The length of the wick shows price rejection. Also, always wait for candlestick close before selling or buying. In the Masters of Swing Trading, I go a bit further to teach you how you can use these candlestick patterns to make profits in the market. Also in the course, you are going to learn a proven and winning strategy, how to analyze and execute trades with precision, advanced techniques to maximize profits even in the most volatile conditions. To check out the Masters of Swing Trading, click the link in the description below.